Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Today, again, a live webinar, of course, is looking at the strategy on Wednesdays. And the strategy of today is actually, or it's not a real, it's a strategy, but it's more of a wider kind of category. But we're taking a look at basically trading support and resistance and patterns on higher time frames. All right, before we do that, though, be aware of these disclaimers. First of all, the fact that the webinar is shown to a global audience, but that does not mean it is suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Second of all, please note that trading for exchange and financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, so let's kick off the webinar, first of all, by taking a quick look at what's going on with Admiral Markets. You can check it out by going to admiralmarkets.com, and you can check out an analytics, for instance, daily updated in the case of wave analysis, technical analysis, at least 3 times a week, I believe, 4 times a week, most of the time, and fundamental analysis once a week on Mondays. So that's a good starting spot. But you can also get a lot of good info here below. Calendars, of course, always useful. Articles and some tools that are interesting. Auto chartist, market sentiment, and market heat map. That's just one part of the website called analytics. There's a lot more you can discover with education, webinars, platforms, the instruments you can trade, and how you can start trading, of course, as well. So please feel free to discover that. But after the webinar, hopefully, we'll be now taking a look at the live chart. Let me also open your way of talking to me, which is the chat box. So if you want to reach out and ask any questions, feel free, of course, to do so through that chat box. So the webinar, now strategy webinar dedicated to the higher time frames, basically, because yes, I do have a tendency to look more at 1 hour, 4 hour charts. And basically that's my niche in a way. I do sometimes zoom into the 50-minute chart, but that's when I, on a higher time frame, see the space, see kind of good development going there, and I like to capitalize on lower time frames. I know that not everyone though can monitor the charts, the updates, the technical analysis so frequently. So, and some of you maybe would like to have techniques for less kind of intense way of charting, right? Some of you maybe are have a part-time job or a full-time job or studying, and you're looking at this recording, or some of you are live in this webinar here, and maybe you only want to spend 50 minutes a day looking at the charts, right? You're just looking for some extra income, some extra way to find more freedom for yourself, either so that you can, save more money for your retirement or for your kids perhaps studying, or maybe you want to work less for whatever personal reason you have in mind, right? But not everyone can be that intensively with the market. So that's why we have higher time frames, and it's just the disadvantages is that you will have less opportunities, but the advantage is that it's less time consuming. So with higher time frames, I think it's good to take a look on weekly charts probably for analysis, and daily charts probably for some entries. That's, I think, the best combination. You could, of course, use daily charts for analysis too, but I think it is good to take at least a look at the weekly chart at the minimum. So with the euro dollar, for instance, what we're looking for is support and resistance and patterns, basically. So just using classical technical analysis. I'm not going to be in these webinars discussing any particular system, let's say, but I would just be combining candlestick patterns, chart patterns, trend lines, Fibonacci levels, support and resistance levels to find entries and exits. All right. So we're looking at a blank chart at this moment. Let me use my typical Keltner bands and moving average. All right. There we go. So if we see about 3 candles in a row in one direction, we can consider that already a start of the bullish momentum. So this is definitely momentum, right, on the weekly chart. And I think that once there's momentum, there is an opportunity to trade it. Oh, sorry about that. I think my MT4 has some troubles. Let me give you 1 second. I'll just restart that. I was saying that you basically can take retracements of bullish candles once there's momentum visible, and you can do that by using a fib. And I'm going to show you how to do that in just a second. I just need to get my charts back. All right, there we go. So basically, you can just take a retracement of that fib, of the candle, sorry, and put a fib on the candle, right? So for instance here, strong candle, good candle close, need a high, right? Wait for a 50 or 38.2 fib retracement, put a pending order there, put a stop loss below the low, and take profit at 1-to-1, which is probably around the minus 61.8 target, or aim further if we think that there is further extension possible. It could be that simple when looking at a daily chart, a weekly chart, right? And what can we aim for besides the minus 61.8 target? Of course, we can use support or resistance from higher time frames like this, right? So in this case, maybe aiming at the minus 61.8 makes sense, or putting half there and half at the minus 100 target, right? Because those are two strong resistance levels. You could split the trade. I don't mind scaling out with targets and putting half the position at various targets, right? So, or even a third of the trade at 3 targets. That's fine in my view. So this is one example, right? But if we take more examples of this momentum, and momentum is easy to trade, of course, relatively compared to a range, but this is a pretty simple entry technique using the retracement tool. So we could see, for instance, this one right here recently. Good retracement and up to the minus 61.8 target. We have one right now as well, actually. Good candle. Of course, the criteria is that we have a good candle, right? Sorry, it seems to be, there we go. Somehow struggling to move this fib. There we go. It's a bit difficult to see that, so let me go to the daily chart. Yeah, so it looks a bit odd, but should be correct. Yeah, that's about it. So we see a pretty deep retracement, but still hasn't taken out the stop loss, so still alive, and an entry at the 50 is, still doing relatively okay. I'm not sure if this will turn into okay trade, but I think there's a decent chance. Now, the other, of course, way is besides fibbing the weekly candle, if there's strong momentum, once again, right? And momentum we classify, we've talked about this in other webinars, but we want to see 3 candles, 3 bullish candles, for instance, and we want to see continuous higher highs and higher lows with these candles. Now, not every candle will have that. Of course, 1 candle will not, 2 candles will not. That's fine. As long as there's a higher high within 5 to 6 candles or a lower low within 5 to 6 candles, then that's fine. All right, and that's okay. So this is definitely momentum since, let's see, this is 2, 4, 6, definitely since here, this low, but maybe even since here, just a continuous upside. So typically, if the bullish candle is closing near the high, it's good, unless the candle is too small. This candle is quite small. This candle is quite small. So you want a decent sized candle. But most of these lows will not get broken. Look at this candle. This is a bit smaller one, does get broken, the low. This low doesn't get broken. This candle's good. This candle's good. This one, you see? So it's a pretty good way of, it's very simple, just looking at momentum and fibbing that. Now, if you want to get a bit more sophisticated, but of course, keep an eye of the overall context, right? Keep an eye on what patterns are we seeing, what wave patterns, chart patterns are we seeing, because that will help with reading momentum. And of course, we need to look at where the support and resistance is. The next thing we could do is look for, basically on the daily chart, look for patterns and confirmations of those fibs. So let's say, for instance, we had a fib on this candle. Right? On this candle. There we go. And we zoom into the daily chart. Right? So let's see if I can zoom in a bit more so you can see it a bit better. Let me get rid of these lines. All right, there we go. So here, for instance, we don't see the retracement, right? But I wanted to show you how we could trade the retracement. Well, we see a 23.6 retracement, and we see bullish engulfing twins, right? So we can use basically the daily chart to look for retracements, look for confirmation, and trade it to the upside, instead of having a pending order at these fibs. So if we see bullish engulfing twin right here, not the bullish engulfing twin, but we see a bullish candle at the 23.6 fib, and hopefully the charts are now indeed okay. Sandra, do you see them? Do you see my blue circle? Then we could be basically trading that candlestick reaction at that fib. All right. The stop loss then would be tighter. We wouldn't use the weekly low, but we could use the daily low, and still aim at the 61.8 target. That would be a 1-to-1, or aim higher to get more out of it. Do you see my blue circles here, folks? Is the display working? Hope it is. Please let me know. It would be good to get it confirmed before I move on. All right, good. Now, you might be scared that price has already moved away from those fibs, but don't forget that I would be using in this case, a tighter stop loss, not the weekly low, because we have the reaction. All right, it's a shallow fib, but that's okay because we're using a different kind of parameters. Let's take a look at one more example. On the weekly chart, I think what we were using this example, right? All right, so let's take a look at that on the daily chart. All right, there we go. All right, I hope that the speed is good. There might be some delay. I'm sorry for that in that case. Hopefully next week, there are some internet problems in our area, so hopefully by next week the problems will be solved. Yeah, it's a bit early indeed, I know, for me too. But we'll have a recording, so you can always refer to that. All right, so this is that weekly retracement, that weekly candle, the fib on the retracement, right? And we're looking at we're looking at the fib on the weekly candle, and we're looking at a retracement on the daily chart, and we see a reaction at the 50 fib. And we see a small little bullish candle at that 50 fib, right? So that could give us an indication that this retracement is finished, and basically price is ready to go back up again. So that's a confirmation, rather than taking the fibs, it's a confirmation of a reaction at the fibs, and we could just simply measure and monitor basically these daily candles, right? So we don't have to look at any intraday trading, we don't have to look at any charting that is very intensive. So from that point of view, it's easier, right? And we could take the entry there. Well, in this case, we could put the stop loss below the low. We could also go maybe to the 61.8 or still use the low of the weekly chart. All three are options in this case. Why? Because the daily candle there is not very strong. All right, it's not a significant candle. It is an okay candle, but it is one where maybe the stop loss placement is a bit in doubt. So from that perspective, it could be a bit more better to be slightly more cautious. All right, let's take a look at some other pair maybe. Does anyone have a currency pair in mind that we can take a look at? All right, we got some examples. And we see dollar yen, pound dollar. Let's take a look at those. Let me just give me 1 second. Need to retweet my wave analysis, which I forgot to do actually. So I'm a bit distracted by that. Let me get rid of that task. Otherwise, I'm not good at multitasking. I would just not be able to focus that well. And I want to send out that analysis. Takes 20 seconds, and I'll be ready. I forgot it this morning. All right, that's done. So let me head back to the charts. We'll take a look at dollar yen, pound dollar. All right, there we go. So in this case, when the pound has a weekly candle, right, that is strong, but made a shallow retracement in this case to the 23.6 fib, and price has probably already responded to that with the strong candle. Basically, yesterday's candle was already probably an entry with a stop loss here and targeting higher highs, considering the momentum, right? So this is indeed a good example. Just like the euro dollar as well, in fact. So dollar weakness definitely in play here with the pound dollar and the euro dollar. So both are looking strong. And how far can this push up? Well, we can put that fib back on the weekly candle like this. And I think we have a good chance of getting to the minus 61.8 target, maybe even further to the minus 100 target, right? So those are targets. Now, some cases, this candle could be quite big, and we might want to wait for a retracement of that, and we can put a pending order halfway the daily candle, right? We don't have to, we can keep playing around with these fibs and retracements and breakouts, basically. But it hasn't made that retracement as yet. But don't forget that it could still, in the future, could make a little bit upside, make a retracement, and then head up, right? So as long as this retracement, I think, is still okay, as long as price doesn't hit the target at the minus 61.8 target, and price doesn't take too long to make this retracement. It has to retrace within a couple of days and then bounce within 5 to 6 days to make a higher high. Otherwise, I would, oh, sorry about that. Thank you, ZT, for that. It was frozen indeed because I was retweeting. I forgot to unfreeze it. So now you should be seeing the pound dollar, right? So I had, just to recap, basically put the weekly fib from here to here. Good strong weekly candle. Now this momentum is a bit doubtful, but we did have 3 candles in a row, so I think it's okay. And also the sheer strength of this candle, the size is okay too. Plus we do see higher highs and higher lows, so there are reasons to say okay, it's fine with fibbing. From a wave perspective, I know that I was looking at potential wave 1, 2, but if you look at it from a pure price action point of view, that after last week's candle didn't seem that likely anymore. Plus, we did have 3 candles. There's momentum, right? Even if there's a strong candlestick pattern, we might think about it too, although they are not momentum, right? But just looking at basically the wider context of things, it could be acceptable to look at potential upside trades, even as reversals, of course. But find the right moments. So putting a fib from here to here, looking for retracement, we got that, but 23.6 fib bounce is very shallow and a very strong candle reaction to it. So that could be an entry right here at the close. But another way, as I said, could be to wait for a retracement of halfway that candle. And it doesn't have to be immediate. It could be that price makes a little bit of a higher high, then makes a retracement, and then bounces. And that's okay still to use as a retracement. But if it does retrace a bigger part of this swing, you might want to move the fib. Let's see. It depends on the weekly candle. We can still, let's see, it would have to be within this week. So today could be up, or today could be slightly down. It could be up and down intraday. Then tomorrow could be down like this, and tomorrow Friday could still be up, right? And we would have a short here, a long here this week still, and it would have to be held over the weekend. Of course, logically, if you're using weekly and daily charts, there's no other way. And it looks to be good to go for next week. All right, so that's a trade that might work out with time. Now, if it doesn't happen this week, next week we'd have to look at the new weekly candle and see if it's still a suitable kind of environment for trading. Pound yen. Pound yen didn't decide to retrace yesterday, by the way, just kept up flying. All right. Now, in this case, we have 3 candles in a row. I think that we could say that this is a bullish environment already. We have also a pretty strong candle here, so I think that's fine. Once again, 3 candle in a row is not a minimum, especially if price is in a range already. As with the pound yen, it is in a range, which is a bit different, right? I was talking about trend environment. If it's a range environment, it's a bit different. We'll talk about that as well. So this is more a rangey kind of structure. So we don't need 3 candles necessarily. What we do need to understand is support and resistance in ranges and candlestick patterns. So that's a bit different environment. So with that in mind, we need to understand that where are the key levels, so we can start drawing some trend lines like this. All right. So yes, price was retesting a support level from here, just as I was retesting a resistance level right there. And we can see that price indeed made a doji at or slightly bullish candle, in fact, right at support. So that could be something to think about. We don't have to take the weekly candle itself, but on the daily chart, for instance, we could take the reaction of that. Let me go back to the weekly and put a fib on that candle. Because in this case, if we're expecting a bounce at support for a move back to resistance, which we talked about live as well, right? We wouldn't expect necessarily, it wouldn't be so strange to get some kind of slow corrective pattern first, because don't forget this is momentum down. So to have a slow upside turnaround is not so strange. So putting a fib on that candle makes sense. Looks like a bit of a pin bar with this wick, and waiting for a retracement of that wick is good. So we can take a look at the fibs right there, and we can see that basically we had a 61.8 fib. So putting a pending order there, for instance, with stop loss below the low would be one way of tackling it, and that trade would have worked out well, right? If we take the next setup, would be, for instance, this bullish candle, right? So we move the fib and put it on this bullish candle, because that's a bullish reaction, strong reaction. So we might expect, as we were thinking about a continuation to the resistance, like this, and we see a 61.8 fib again. Or we can wait for the reaction to the fib, either this wick or this bullish candle, but to put the stop loss tighter below the low instead of putting it below the weekly low, and aiming for the fibs again. right? So pretty straightforward things for the pound yen, but in a ranging environment though. So that's always a little bit more difficult. The dollar yen, let's take a look at that. All right. Now the dollar yen is where things could have gone wrong. It's a great example. So I'm glad that Flavius mentioned it because this is where I think this would have been a loss easily if you have a pending order because we have to be realistic. This was a breakout. We had momentum to the downside, right? And we have a good breakout candle. Good candle size, good candle closing the low. So from this perspective, we have momentum here. We could easily expect price to get deeper than that, right? Easily we could expect price to get to 105, for instance. So from that perspective, if we would have used these concepts of looking at basically candles, support and resistance patterns, then in that case, I think we would have used this fib this week. All right. And if we had a pending order, that would have been a loss for sure. So those things happen. And this wick here would not have helped us too much because it was a small wick, and I don't think that gave much of a warning. We can measure it still to be precise. It's always good to measure it, by the way, even though visually it might look good. It is good to put it in percentages just to get a better read of the candle. And let's take a look what it says. It says that the close was 53 pips off of the low, and the total candle size was 260 pips. So that's about 1/5, which is 20%, and there's nothing wrong with that wick. All right, it's okay. It's a decent wick. Nothing that would warn us. If we look at the daily chart, we would have avoided a trade setup here. Why? Because a pending order, you have an order waiting here, and the day happens, and you look at the charts and you see this massive bullish candle. There's nothing we can do anymore. That's the disadvantage of pending orders, basically. Whereas if you wait at the end of the day to see how price responds, then you would never take a short against such a strong bullish candle. Right? Look at the size of the candle, look at the candle closing the high. It totally destroys the bearish outlook. And you would have avoided a trade. So it does depend on the entry technique here, whether the trade was taken or not. This is a simple tool, simple analysis, how I'm presenting it, but really I want to emphasize that it's good to look at the overall structure and look at the overall dynamics and patterns. This is something that I typically do in other webinars already, so I don't think this is the place to really emphasize that too much because I would be repeating myself a lot. But this is just to give you an idea how you can use the psychology of candles in a way, support and resistance and patterns to find some interesting trades on these higher time frames. Be aware that these time frames take longer to develop, and you can also use them in a different way. You can use the analysis, but then trade them on lower time frames, right? It's also possible if you have the time to do that. If you see what I mean, right? So one last pair, and I would have to push off a bit earlier today, but the next week we'll dive into more examples of using ranges and momentum and how to trade those. So one more pair. Anyone have a preference for a currency pair? Nothing yet. So let's take a look at, I don't know. I don't have any preference. Let's take a look at something non-dollar then. Let's take a look at Euro. very choppy one, right? Big range one, big range. All right. So far we've looked at currency pairs that had an interesting setup. All right, and it's also, by the way, nothing wrong and good practice if you are using high time frames to look at the monthly too right away, as well, eventually, right? So look at the of course, especially when the monthly candle finishes, definitely. So monthly seems to be indecisive. Wick on top, wick bottom. That doesn't look too good. Weekly, we see bearish candle, doji. That's not interesting. And bullish candle. A lot of mixture. We see basically price not able to break out of kind of this zone that it's been. So this is an example where we might just skip this currency right away, right? So I wanted to show you a currency where it might not be interesting to look any further. The euro odd is a good one. I got two last requests, euro pound. All right. So euro pound is an uptrend and definitely had bullish momentum. But this could be a strong reversal signal, right? Something to think about. I wouldn't necessarily just take it flat like that, but could be a reversal signal worth looking on the daily chart. I wouldn't take any pending orders to the downside though, but could be worth looking for on last week, right? To look for downside. Then last week we had another bearish candle that makes it a bit easier to look for more downside, but we didn't have any retracement here, right? So no way to trade that unless we take a breakout. That's something we can discuss next time. At this moment, the daily chart continuing with bearish candles, but this is something that we'll have to discuss next week. This is a different kind of method, all right? From the weekly perspective, there was a setup this week, I think, a reversal setup if we had a retracement. We didn't get it. And then last but not least, the New Zealand yen. I thought I had it somewhere, but let me open it. All right. So in this case, basically last week was a doji. I would not trade it, even though the wick was on top. It's not something you want to trade. The week before was a doji, not interesting really to trade to the downside. The week before could have been traded to the downside. It was a bit of a wick there, so probably not a pending order, but probably a market order, like a candlestick reaction as it retraces. Could have been a good trade for downside, as you can see. And here was a good trade for retracement. Here was a good trade for retracement. So good candle, not good, not good, not good, good. Just looking at the candles itself without even looking at the larger context. And that is, of course, important once again. This week, we're getting a bullish candle. So if this week is a good bullish candle like this, it does make sense to next week look for upside upon the retracement. All right. So in my view, but once again, it is good to take a look at the larger context. And if we do look at the larger context, it does make sense. We see a trend line, so that could be a support. And we do have space to at least the top. It looks like at least the top, so there's some good space there next week. Upon the retracement, we could see a pullback and continuation up to that resistance. So that looks pretty okay in my view. New Zealand yen upside if this weekly candle does close decently. All right, that's it for today. We'll be talking about breakouts, how we can handle that as well next week on Wednesday again. If you're interested, once again, in more webinars, if you're looking at the recording, those that are live already know that, but if you're looking at the recording and you're interested in more webinars, you can find that out by going to this page or going to education and then clicking on Forex and CFD webinars. So that's it for today. Thanks so much. Wish you all great trading and talk to you soon. Cheers.